Hey guys, happy Monday. What's going on? It's your buddy DannyDealz. Happy Monday. It is May 22nd, 2023. I want to give you your midday movers, your SoFi update. It's your lunch hour if you're lucky enough to be out on the East Coast. It is 12:10 out there. It is 9:09 a.m. Well, 1 minute, but you know what I mean. 9:09 a.m. out here on the Pacific Coast in lovely, rainy, dreary Los Angeles. The SoFi stock. Just want to give you as quick an update as you can. As you know, I'm a bit verbose, but SoFi is up 31 cents, 6.29% on the day. Still moderate volume, which is a good sign. Um, to be moving up like this, it's not a pump. 18 million shares traded. The range today um, has been from $4.92 to $5.24. So we are on a solid upward trajectory. Um, what's going on with the SoFi stock? Well, basically, are shorts covering? That's what a lot of you want to know. The answer to that question is no. In fact, there have been an additional 150,000 net shares actually shorted today. So shorts are, in fact, not covering. The free float short percentage is approaching 15%. 30% of the free float is out on loan. Utilization is at 100%. Cost to borrow is up 10%, and the shorts continue to dig in illogically, inexplicably. And the explanation is that other banks, other financial institutions, other investment houses absolutely hate SoFi, and they see them as competition. They see while their deposits are flat or shrinking, SoFi grew deposits by $2.7 billion in the last quarter. Their deposits are up over $10 billion. They are one of the fastest growing banks in the country, just cracked the top 100 banks in the United States. In addition to that, SoFi is growing their direct deposit base as they bring in these new customers into their checking and savings products. The customers are actually increasing the rate at which they are using direct deposit. And I believe I read a statistic earlier that 90% of the deposit growth is coming from direct deposit customers. Again, I don't want to spend any more time on this. Douche nozzle from Wedbush, who had always been a buy on the SoFi stock and had always had an $8 target. And then after earnings came out, which were very solid by all accounts, he went ahead and did a downgrade to $5. I believe, I can't prove, but I believe in conjunction with the short attack. And I believe this type of analyst who makes these very, very radical moves that move the market. He knew exactly what he was doing. He timed it and he cut it again to $2.50. And this is a stock. The most conservative bearish analysts have price targets in the $6 range. That includes like JP Morgan, who, hates SoFi, but they have a $6 hold on it, they reiterated 5 days ago. Piper Sandler buy. Mizuho, Dan Dolev, who is absolutely brilliant in comparison to this David Chiaverini, who doesn't even cover fintechs. He just, decided to do two massive downgrades with the biggest short attack in the stock's history after a beat and raise. And then his logic on that again was um, they're doing too many personal loans. So as those all go bad, SoFi won't be able to make a profit. SoFi will have to do a money raise. Sorry, I'm a little bit of little bit of a head cold here going on, but I'm trying to fight through it because you guys need this information and my brilliant rambling nonsensical analysis. But anyway, even Citibank 850 in a buy. These are highly rated analysts at Jefferies, 5-star, solid 5-star analyst with good returns, as opposed to this moron who is one of the worst analysts on tip ranks. You see these guys with very high ratings. He has a buy and an $8 price target on the SoFi stock. But, the short attack is what it is. Shorts are, in fact, not covering. People are just buying the stock. If you want to do an analysis on why these guys are wrong, why David Chiaverini basically made up a false story, um, On purpose, in my opinion. I can't prove he's coordinating illegally with short sellers, but you just have to ask yourself the question: did that earnings report? A lot of the information was already known that he's talking about. The only thing that was new there was that they didn't sell loans in the first quarter, but Upstart has been absolutely going nuts lately. And basically, the news was they made an agreement with some company to buy their loans for the foreseeable future. It's like a couple $1 billion worth of loans. So Upstart knows that they, have a buyer, but it's like to make the assumption that because SoFi didn't sell loans in the first quarter that they didn't have any demand for their loans is absolutely stupid. Their loans are of much higher quality than Upstart, longer durations, larger loans. These are loans that will have way more demand with institutional buyers, and the notion that they just were making more money. Dan Dolev went through and explained this when he explained why this hit piece by Wedbush was just completely illogical and stupid. And he's like, it doesn't make sense intellectually, fundamentally. It just doesn't make sense. It's pure bullshit to help short sellers. That's what it was, in my opinion. But anyway, so they go through and explain SoFi is just making more money on the interest spread. So they can hold the loans for 6 months or a year and then sell them. Their loans tend to be 2 to 5 years. They're not these short term $1,000 loans you see with Upstart. But in any case, guys, I am just doing another one of my famous rants that really doesn't go anywhere. But a great article. I read this morning. I don't have any free left at my office computer. I read this early this morning at home. But if you are a member of Seeking Alpha or you have some free articles left over there, go ahead and read this article. SoFi, false sense of risk creates an exceptional opportunity. Rating upgrade. And this is May 22nd, 2023 in Seeking Alpha. Um, this article lays it out, what the credit scores are versus the competition, what the incomes are versus the competition, why statistics prove these borrowers are not going to default in these great numbers that create this huge catastrophic risk for SoFi. It's simply not going to happen. It is made up. It is made up bullshit. So let's take a look at the SoFi chart again. I highly encourage you to read that article. It lays out all the numbers. It's not opinion. It lays out the numbers of why that downgrade to 250 was a farcical setup and why the stock is going up from here. Here's the low we made down here at $4.51. Hey guys, apologies. My Yahoo charts were behaving very oddly. Obviously, as most of you know, when Yahoo gets a lot of traffic, things start to go a little bit sideways. But anyway, just wanted to show you the 5-day here. Made this low down just below $4.50, and we've just been retesting this very solid upward trend line. It broke down below here, but this was killing stupid turd calls. They were just, reshorting and dumping to keep this down below 5, so those calls didn't pay. You see that almost every single Friday as SoFi investors continue to buy ill-advised calls. And people are saying, what are we going to do next? Well, what we're going to do next is go up. That's simple. We're going to go up through $5.60. We're then going to go up through $6.08. Then we are going to bust down $6.50. It's just that simple. You don't have to admit it, but you have to accept it. We just shattered through the moving average here, the 50-day, and the 50-day is going to have to race to catch up because people are buying into the SoFi stock. You see people just pushing money into stocks like Upstart and Affirm, and those stocks compared to SoFi are absolute garbage. Their borrowers are garbage. They're horrible people. They live in trailer parks. They have no money. They're buying things they can't afford. They're buying Peloton bikes when their trailer roof is leaking. No, seriously, folks, I don't have anything against people who live in trailer parks. I'm sure they're fine people, but we just don't want to lend them money. So then what's going to happen next? What's going to happen next is very simple. We did a triple top here at $8. First back in May of 2022, as indicated by these blue circles here and here. I'm trying to zoom in, but again, this is just extremely touchy. Um, And then again here on 8/4/2022, back in August, we went up to that $8, $8.25 mark. And then here again tested that $8 mark, and then the tail went all the way up to 8.25. So simply what's going to happen, we are going to break down 8.28 and then 8.25, and we are going to go higher. Um, the fundamentals of this stock are extremely good. Again, read the sober analysis about these borrowers. The SoFi had to pivot to personal loans because they just didn't have a choice. We're not writing a lot of mortgages right now. The government took student loans away. When you add student loans back in, SoFi is going to make a very strong comeback. Then mortgages come back in, and then you're going to start to see, when you buy companies and you integrate new companies like Galileo and Technesis, and then you take Technesis and you make it part of Galileo, there's going to be a lot of growing pains, and a lot of times that would just be catastrophic. You're trying to combine all these moving parts, take the best parts of management, take the best employees, yet streamline things and save costs. And then SoFi had its own systems that were somewhat, produced by third parties and reliant on third parties, and they're transitioning everything in house while they grow that business, on its own with its own customers. They're also transitioning their entire like SoFi business, banking, invest, to their own platform. So the management has done an outstanding job over at SoFi. Every time one of the bears tries to explain why management has faltered, um, I would like to ask them, what alternatives did management have that, you would have think would have been better for them to do? Just again, we shouldn't have made these personal loans to these extremely qualified buyers. We should just shut the doors, stop generating any revenue, fire everyone who works here, and give up and go home because we're weak turds. No, that's not what Noto did. That's not what LaPointe did. That's not what SoFi management did. SoFi management, again, they adapt, they overcome. And you say, okay, could some of these loans default? Could they have to do some write downs? Yes. Yes, they might have to. The federal regulators might say, listen, SoFi, if you're not going to sell off all these loans, you have to put some money in reserve to cover some potential defaults. And okay, that's not a catastrophic thing. It's not going to, take their market cap down by, 50%. They're not going to change their accounting structure. That's not even a thing. You're not allowed to do that. So the notion that regulators will give them a nudge and then, oh, I'm just so exacerbated, folks. The SoFi stock was on a nice upward trajectory up above $6, and it's coming back. And the shorts can't stop what's coming. It's not all waiting on them. The SoFi stock up 29 cents today, or 5.88%, just took a slight dip. The time is 9:24 a.m. Pacific time. It's almost 10:30, your lunch hour out on the East Coast. Hope you guys are having a great day. Wanted to just bring you a little SoFi rant that you have come to expect from me, and helps me get me through my Monday. Want to just take a quick look as we close out at the live short interest and see if these bozos have started to cover. Of course, they haven't. They're digging in deeper. They've borrowed a net of 250,000 shares again today. Cost to borrow max is up as high as 2.32%, which it's never that high because SoFi has a huge float. But the shorts are digging in even further, and they are very, very stupid. Shorts are huge turds, and I hate you guys. On behalf of Hurricane Lopez, my name is DannyDealz for supervising producers Stock Karen. We hope you guys have a great day. This is not financial advice. I don't even think it made any sense or was coherent, so you would be an absolute fool to listen to me. Thank you.